We have Mr. Arun Maheshwari, the Joint MD and C of JSW Infrastructure, to talk to us about just that. Hi, Mr. Maheshwari. Good morning. Thanks so much for making time. Your revenue growth this time around was quite solid, above 25%. But break it down for us. What was the pricing-led growth and what was the traffic or volume growth?
Okay, fine. The quarter has been very, very stable as what we have seen, because quarter two, we have grown by 26% as compared to the previous year quarter. But if I had to look at quarter on quarter, there has been a bit of a dip in the volume because this is a seasonal quarter. This is a monsoon quarter in India. So it is already factored in. Always Q2 is the weakest quarter in a year. But that's why H1 is slightly lower than as compared to S2. But then in any which case, we have shown a 26% growth year-on-year basis. We have to look at the similar quarter of last year. And the revenue has grown by 29%, whereas the EBITDA has grown by 33%. Because of higher volume, the total operation cost has gone down, the revenue has gone up, as well as the EBITDA as a result of that.
Right. Mr. Maheshwari, given the global disruptions with war, etc., how is it that you see traffic growth panning out in the second half?
Well, in our case, in our port company, we have a very unique combination of the cargo flow, wherein the general cargo disruption across the globe, wherein the interlinked supply chains are there, which is not really very impacting on us. We have experienced that during COVID times also, wherein the entire supply chain got disrupted across the globe, but our ports were running 100% and were doing volume after volumes. So in our case, we don't see that kind of disruption impacting anywhere, any which ways, especially if our customers, wherever they're sourcing from, that get usually disrupted. But whatever the disruption we have seen in the recent times is really not impacting us in any which case. As you spoke about H2, generally H2 is slightly better than H1 always. We have seen in the last several years because H1 consists of monsoons, as I said earlier. So H2 is supposed to be better than H1 as what we have experienced in the previous years.
So how is the mix between the group versus third-party cargo shaping up, and what is the target mix over next 12 to 18 months?
So see, our journey of third-party mix, as I said earlier in the same channel, that we have our journey started with the third-party about 4-5 years back. For initial good 15 years of our company, we were doing only group company cargo. Now the journey which started with 6% in 2019. Rested about 32% last year. The current H1, if I have to look at, it was 36% of the overall group cargo, wherein overall cargo, what we have handled. Especially when the cargoes are going up and up every quarter, maintaining this kind of percentage on overall volume is a good challenge to have. I think going forward, the way the group is growing, the way the group volumes are also increasing, maintaining a 40-60 ratio, 40 of the third party and 60 of the group cargo, or a 50-50, this kind of combination is likely to happen in another 5 to 7 years' time if I have to look at.
Okay, Mr. Maheshwari, we'll let you go on that note. Thanks so much for making time.